get a sense of what's going to be the roadmap ahead for the company. And for that, Mr. Mayank Agrawal, the CEO of Gallantt Ispat, is now joining us. Hello, good afternoon, Mr. Agrawal. Thank you so much for joining us today on the show.
Good afternoon, ma'am. Thank you for having me here. And good afternoon to all the viewers also.
Right. Mr. Agrawal, firstly, congratulations to you on a strong Q1. And from what I remember, at the end of the last quarter, you had told the investors that FY26 was a year of consolidation and FY27 is likely to mark the beginning of a strong growth phase. So is it safe to say that Q1 indeed is the beginning of the strong growth phase post the numbers?
Yes, definitely in the current environment, looking at the geopolitical situations where the fuel prices are under pressure due to logistical issues and oil in general, we have been able to survive our EBITDA margins and production volumes if I compare it from the last quarter. So definitely looking at the current environment, we are very well positioned where we have been able to maintain our profitability. And as you rightly mentioned that this year is for seeing the growth. So the reason behind it is the capacity additions that will kick off in the H2 of the current financial year, where the capacity is being expanded from 1 million to 1.23 million tons. And the Capex is underway and the plan is as per schedule. And we should commission the units one by one in the second half of the year, which will further add to the revenue and EBITDA growth of the company in H2. And even the solar plant of the company of 85 megawatts is scheduled, 18 megawatts is scheduled to commission in Q2, which is as per schedule, and we are very soon commissioning that project. And the rest 60 megawatt is scheduled to commission in Q4 in the current financial year. So the capacity addition, the solar, everything is on track, and definitely it will give a big boost to the revenue and the EBITDA margins in H2.
Right. Also, speaking of the expansion plans, 3,000 crore worth of expansion to 1.23 MMPTA is on track. How will this Capex be funded?
All the Capex is being funded by internal accruals. And this 3,000 crores is broadly into three buckets. One portion is going into capacity addition, as we discussed, out of which about 800 crores of the Capex is already done over the last financial year and the current financial year, which will add to the capacity addition. The second part is the solar, which I just mentioned is scheduled to commission in Q2 and Q4. And the third part is the mining, which is almost 50% of the Capex. So as you already know and the viewers are aware that we had secured 3 iron ore mines, two at UP and one in Rajasthan, which would ultimately integrate our raw material. And that is scheduled to commission in FY28, and that is currently also on track.
Also, Mr. Agrawal, how much incremental revenue will this 3,000 crore worth of Capex generate, and by when can we expect that?
So if I again break it up into three buckets, the capacity addition would generate a pro rata EBITDA margins and revenues of 25% in revenue, and currently we are operating at about 18% of EBITDA. So that impact would come from the capacity addition. Solar would also impact substantially to the profitability of the company while driving its renewable energy mindset to improve the ESG framework. And mining would individually make an impact of approximately 2,000 rupees per ton on the steel making. So all in all, once these entire Capex are completed by 28 progressively, while we see the impact of capacities and the solar in the current year, and we see the mines impact coming in the next year, we will be very, very well positioned and to face any such geopolitical situation in the future, while it would add considerably to the EBITDA margins also.
Right. Right. So, Mr. Agrawal, also the spreads have contracted this time. The EBITDA per ton has reduced to 8,787 crores in Q1 of FY27. That's down 21% on a year-on-year basis. How much of this decline was due to the lower volumes because of plant shutdown, and how much of this was attributed to higher costs?
So this comparison is on year-on-year basis, whereas if we see the entire year 2026, our EBITDA margins were in the same range what we have achieved in Q1. That is 8,750 approximately. There is very negligible difference in the entire year's averages. So the margins are definitely intact, I would say. With regard to the shutdown and the geopolitical situations, our raw material cost is broadly, if I compare it, has increased by 9% year-on-year basis, where half of it approximately is because of the geopolitical situations. And the rest of it is due to the planned annual shutdown taken at the pellet plant at Gorakhpur, which has now started production, and that should get compensated in the Q2 itself.
Right. Mr. Agrawal, on that note, thank you so much for joining us on ET Now. It was a pleasure to have you on the show. Thank you for taking the time out today.
Thank you.